Okay, hey everybody. Sorry, a little delay there. Sometimes got to restart the War machine. Spend the mornings usually on the iPad doing research, videos, things like that. So anyway, FOMC day. Let's see, someone else, KS, trying to go in here, letting everyone in. So FOMC day. Let me share my screen in a minute, but today we're going to talk about Bitcoin, FOMC, and all of that good stuff. Take a run around the bases, see where we are. Kind of tricky business as usual. And I'm going to share charts as always, looking at Solana, the base case. Yeah, so, and where we go from here and how to play the FOMC. So with that, let's go ahead and share my screen. I'm going to kind of go fast, guys. I want to make sure to make a good use of time. And somehow these classes always go a little bit longer than intended. So anyway, I want to download useful, meaningful information always. By the way, I want to kick off, first of all, here's the FOMC. 89, basically 90% chance of a quarter point cut. There's some talk about a 50 basis point cut. Some of the Fed chiefs are voting for that, but they don't really make that decision. This is priced in. Anything over 85% always is the case. So it's not about the rate cut that's being priced in. Now, if they don't cut, we're going to have a pretty nasty dip. But likely it's the 25 basis points as we've seen, and then it's the comments we have to pay attention to. What does Jerome Powell say about future rate cuts? If you want, go check out Camel Finance today. He talks about that in a little more detail. And let's see, one sec. My head cold has sort of started to return. A lot of people going around. So anyway, sorry about that. Anyway, let's dive in. On the overall scheme of things, we'll get into a little bit of the news, mostly the charts. I want a question for you guys because I was watching something, made a pretty good comment about, the best traders wait for the right times to buy, and sometimes it stand out. September, October of 23, October of 2024. We'll look at those charts, but when things really took off, those are the times really to go in heavy. And because you're here and this is, part of the program, I sometimes err on looking for trades when maybe we should be staying out of the market. And so obviously you need something to talk about, but kind of would love some feedback from you guys. And, in terms of in those times when we should be out, how can we give you the most value, whether it's educational videos, and I try to pepper in different lessons, teachable moments, as Mike calls them, things like that. And in terms of, instead of getting into trades, and certainly this is M3 active traders, so we'll be a little more active here. If you're in private clients and that's not your style, watch and learn, but don't feel that you're missing out on anything. We've had some choppy trades lately with Zcash, Solana, and as an active trader, these are those kind of times at bat that we take, and even if we strike out, because occasionally we get that a home run. But really the home runs happen when we're really buying right on a dip, or when they were just getting above the 21 and 50 day exponential moving averages and maybe coming out of the buy zone. Because this is very much a difficult game, 95% lose. So timing is everything, and the smart traders know when to stay out. So it's incumbent upon you to decide which kind of a trader or investor that you are, and to stay in your lane until you make a conscious decision, until and unless you decide, I want to be more active, I'm okay with swing trading, and can monitor the information faster. Because I know that some of you are busy. We're all busy, but some of you can't really keep up with these classes, etc. And you should not be actively trading and taking the trades in the chat if you can't be online to monitor them and you're not setting stop losses. And that's really important, because the altcoins have really bled down slowly but surely. And some of people, I assume, I haven't really heard, you guys have been pretty quiet lately, hopefully haven't been riding these down. I've been doing this a long time, and I do know that often people, I won't say silently suffer, but, in terms of putting our heads in the sand and not facing the facts, nobody likes to lose money. So the kind of overall public service announcement today is just make sure you know where your downside is. Make sure you're taking partial exits so that you can buy back lower, because the worst thing to do is to ride this thing down. Obviously I can't control the markets, and I was hoping that we would continue to go higher and have a nice blow off top into the end of the year. My chat window has disappeared, so I have to turn on my other monitor. But anyway, hopefully I'm making a point. Really take some time to reflect on that. And if it's the holidays, if you can't be actively monitoring, then maybe consider staying out until we get some more clear direction, because I think there's a good chance maybe we have a Santa Claus rally, maybe not, but probably we see a decent correction in, as we usually do in the 4-year cycle, end of December. I'm planning to be out unless our signal is showing universally it's time to stay in. But in the next month or two, probably we see a decent size correction, if not bigger, and the signs still point toward recession. And so I think that at some point in 2026, things will revert and come back around. The Fed will be forced to do more interest rate cutting and money printing. But the question is when. And it's not immediate. It's not around the corner. These things have to happen at the right time. So, all right, some comments coming in. Let me just see. I'll read that here. I want to dive in for everybody, but thanks for the feedback. And Nicola, yeah, well, you've been a great student, and applaud you for being active and really making an effort to go through it all. So, great job. And so, and you're welcome. All right, guys, let's dive in here. A quick look at the markets here. Some people can only hop in for a little bit. As far as Solana, I'm a huge Solana bull long term. And however, near term, don't know. We pushed right up the two scenarios that I had portrayed for us. We pushed right up to that resistance zone, and I sold some there, and then I bought some back, and then we sold off a bit. Still bullish with a bullish ERI. However, we're kind of looking at starting to sell down here. So I have about I'd say a third or a quarter of the total size position I'd like to have. And so, but I'm watching this. If we keep continuing to head down, I'm not going to sell any more. And there's another overarching theme of this, is that to be fully out of the market, we risk a rip-roaring rally. But to be fully in the market, we risk further downside and losses and capitulating at the bottom. So I don't recommend doing that. So what I do recommend is having some exposure. And if you have your own coins, I think the altcoins are there's some that are starting to look good, but I'm not recommending buying yet. We're going to be really cautious and wait for specifically things like our TSI on the weekly basis to turn green and above 20. Because, and that's really important. Some people look at these as squiggles on the screen, but I've been doing this a long time. This shows us the momentum is returning. Right now, there's no momentum, and we're starting to turn. But until and unless we're back above 20, and you can see I have that alert there. We're saying buy, buy, buy. That's when momentum starts coming back, and so until and unless we get that, now we can chop around on the extremes for several weeks. So just understand that. I know that it's normal, especially when you're new, to try to get ahead of the trade and get in early. And it's right thinking but wrong strategy. And we want to put the odds in our favor. Can anyone relate to that? So we are getting closer, but we're not there yet. And that, since we're still red on that on the weekly, leads me to believe that it's 50-50 that we break out from here or drop it down to the $100 range. So I happen to put stop losses down here around 100. Well, it's tricky because I like that $125 range, but the buy zone has disappeared on the weekly, but still very much there. So our downside is limited. My stop loss is at 120. And so because if we hit that, we're probably going to 100. So if we can shave 20% off and buy it lower, that's mostly what I'm focusing on. I'm not focusing on Bitcoin. I'm looking at Zcash. Everything else kind of in the wings. Bitcoin here, the upside is limited. That 98K, I know a bunch of the day trading rooms are looking to short that level. And this downtrending trend line resistance here most likely rejects and we go down into the support zone around 84K, getting a bit of a bounce, but I think more than likely we go down to 76, 75K on Bitcoin. And of course, Bitcoin generally leads. So we have our work cut out for us. On the other hand, right, Zcash looking pretty good here, back above its 21-day EMA, and the trend strength indicator has been bullish. So I'm giving you kind of a crash course on all this. Let's stay out of the weeds for a moment with all of the other altcoins. We'll get to that, and we'll get to the news. But currently on the weekly chart, look at the Zcash looking very good. So I have some Zcash. I was buying some last night. The breakout above 450, while expensive, bullish engulfing candle. If this can hold here, you know, we should see higher prices. There is some caution here with the weekly TSI heading lower. But Zcash is one of those that has the ability to push higher for some nice gains, and I'm going to be looking for those, you know, not home runs, but giving us some base hits. And so Fibonacci on this retracement, it's come down to the golden pocket. We'll get to that, but I think we could push up into the 600s again, potentially on Zcash. Let's see what happens today, though. A lot depends on today. I would also caution against trading the initial announcement. The markets need a little time to filter things out. Probably want to see how things close today and being cautious. So anyway, with that in mind, let's jump into a little bit of news and come back around on some of the other things. I'm going to also show a sneak peek on some of the new tools that we're working with that Joe's been hard at work at, and ultimately an alert service. There's a lot of moving parts in these things, but we'll let you guys know. All right, so I will dive into the comments. So Nicola says, difficult to say how you could do it differently. Two reasons: you could learn from past experience, learn from experience. So winning and importantly losing a little makes the synapses work. Yeah, I mean, it's true. It's both sides of the coin, and you know, if you want to divert a stream, you have to really continue to push the water in the new direction. Same thing with your mind and the synapses and neurons and all of that. It doesn't happen immediately. Trading is counterintuitive, and it requires constant spaced repetition, and then you go through that unconscious incompetence cycle to conscious competence, which we've talked about. I won't get into it today, but yeah. So immersion is the key, and so you're here. Good job. You're in the right place. We are going to be more cautious with trades. I know it's difficult. I know a lot of people were hoping for big gains coming in at the end of the year, Christmas season, all of that. And but it is what it is. We have to ride the bull and the bear at times. And so I guess basically these are bull and bear riding classes in the end. So see, because we have a time to get because we have a timeout membership, how can, I'm not sure what that means. Because we have a timeout membership, how can we fit in the things of the market to a membership time frame? I guess you're continuing on the first point. I've learned hugely from membership, most importantly, absolute rule of keeping the core investment safe. Yeah, preservation of capital, paramount. Thanks so much for this. There you go. All right. KS says, yeehaw, exactly. All right, well, button your chin straps, everybody. It's about to be a bumpy ride here. Let's see what happens. Key Bitcoin price levels to watch ahead of 2025's last FOMC meeting. Again, 25 basis points, 90% likely. Question is the comments. What is Powell going to say? And you know, look, he's kind of switching gears to legacy preservation. He doesn't want to blow it, but likely they will pause for a while because they need the bond market to catch up. It's not my expertise, and so some of the people like KS and Diogenes far more up to speed on those kind of things. I'm a trader. You know, look, we can't ingest all of it. Show me the charts, I'll tell you the news. But some of this is worth keeping in mind. And so that's why I'm doing hours of research today, so that you don't have to. Bitcoin remains volatile. Big overhead resistance at 94K in place. We looked at that. Let me just go over. I'll use this chart here. 98K is resistance on where the sellers are, but certainly 94K, you know, look, that's why they're saying that. Simple stuff. Prior support flipped as resistance, needs to get above 94K. Can we, let's put a little alert here right at 95K. If we get above 95K, where do we likely go? Pop quiz. probably to that sell block, right around 98K. And so that would be an alert to let us know maybe we're going to push higher. But please don't get too excited and go leverage long. The top is in for 2025. I've said that a while back. Now, I don't know for sure, but 90%. And look at this, all these lining up on this. So what we've done here, by the way, how do you guys like this? This is a new version. I've been asking Joe for a while. Can we just have a single dashboard that shows the TSI, the RSI, and the ERI in the same little box, multiple time frames? We're still kind of sorting out the best way to do that. And then order blocks is what that suggests. It says you can't see it because these little boxes are ahead of it, but order block. So, excuse me, if it's in standby mode, that means do nothing. If price is in a red sell block, it'll say sell, and if it's in a buy, it's a buy. And we are gradually working toward a super indicator rather, and we'll keep you posted. But anyway, that's why they're saying that. No big surprise. And guys, if you have any questions, thanks, Nicole. If you have any questions, please do ask. I see a lot of you here today. I'm going to go through my agenda, but here for all of you. And if you think no one else has your question, chances are quite a few do. And those of you in mentoring, I'm always, there's a lot of questions that don't come out in these classes. So don't be shy. All right. The odds of 25 basis cuts, 96% on Polymarket. Polymarket, very, very accurate. Of course, very accurate in the last election. So we're getting a 25 basis point cut. I think the odds of doing a half point were astronomical. But then again, that goes back to having a little skin in the game. I think Solana's the play there for getting in both sides. If there is some huge rally, I'll be watching. And later on, if you're free today and you're so inclined, and you want to double down on, but be careful of any initial pump. I think the reality is we want to be buying above 145 on a closing basis. Got a little ahead of our skis the other day. It was pushing up there, and sure enough, sold back down. That's what happens. Why does that happen? It has nothing to do with the fundamentals of the coin, and I think it's another trait worth noting. And as newer investors, there's still some of you here, the tendency of falling in love with the project and all the news and the future, that's not the game we're playing here, you guys. The future, the long game, excuse me, obviously that's why we're here. But in the short term, these prices are getting pushed by high leverage traders and in some cases market makers hunting for liquidity. And that's why this becomes a difficult game unless we're really using these signals. I think that if we stick to our optimal setups, stick to our guns, we can really do well. I will move this blue zigzag over because that's not in the cards right now. I'll kind of put it in limbo, right? It's up here. We need to see what happens next. This only comes into play if and unless we can break above that support and retest. So keep that in mind, burn that image in your mind. So if and when we do see that break above retest, that's when we want to get in. And that may be way out in the future. We don't know. I'm going to park it here because the most probable path right here is we drop down in the 128 range, maybe get a pop, come down in the 125 range, and then go. And we'll see. But if not, the other option is this drop down, pump, zigzag down, and go down to this $100 range. Are we okay with that? Are you guys prepared to have some capital dry powder for that, to take some losses at 120, if not get out and take a loss, so that we can kind of come down and catch that $100 range in the long term? That would be ideal. Okay, so I don't see any questions. So we'll keep on going, and Bitcoin price may drop to as low as 84K if key support levels are broken. Can't talk today, guys. I didn't have enough espresso, apparently. 84K, there's that resistance level. And we talked about that. So a 96% chance, 25 cut. That's what we already discussed. And if Bitcoin FOMO trickles back at 94K, there is so much divergent opinion. And so it's really tricky, and I don't share all of it. I share some of it, and I show opposite sides. So in case you're wondering why I'm showing both sides and if I'm bipolar, the answer is no. I'm giving you the sort of the frame around the picture that nobody really knows. And I'm starting to screenshot, on YouTube where they have all the different videos. Today I screenshotted two very different viewpoints. Camel Finance thinks we'll push up, pull back and go, dip and go. And he's very good. There's another guy I won't mention because I don't want you to go there and get wrecked, because sort of an eccentric day trader, these Fibonacci circles, and he's been remarkably right on major inflection points, and so much so that it leads toward the argument, are we in a simulation or a hologram? But he's very bearish, and there's a technician I've shared, a TA person, that is also very bearish. So, unclear. Okay? When in doubt, stay out. So the best we can do is stay on top of that and understand that, and not get faked out, not jump in on hopium. Sorry, a little bit of a congestion here. Bullish price action from reduced interest rates. Likely already priced in. What usually happens on these interest rate cuts is that it kind of rallies into them, and then they sell it off. Right? Buy the rumor, sell the news. So now the thing is, this is becoming not necessarily consensus, but it kind of gets in a gray area. If everyone's saying, oh, okay, it's going to sell off on the news, if everyone starts believing that, then we have to be ready for a rip-roaring rally. These things tend to, wherever the max pain trade is going to be. For some of you, this is a review. Some of you, this is new. So I'm getting through it quickly, but I'm going to throw it out there as well. All right, Bitcoin retreating toward 92K on Wednesday as fears mounted that Fed Chair Powell speech after the meeting could put the market back on shaky ground. And 92K, let me go back to the regular charts because that might be throwing people off. Yeah, I know people are shorting that 92K level, but doesn't matter. Anything could happen. And you should not be shorting if you don't know what you're doing. Joe and I are working on an option trader spread trading software that may be a better angle for you if you want to play the downside. We'll get into that later. Options are not for everybody, so we'll stay in our lane here. But for some of you that might want to beta test that, we'll be asking probably by January. So, all right. And then we'll be talking about Coinbase futures at some point also. I don't want to go too far down the rabbit hole. Now's not the time, you guys. So, anyway, Powell's language at the FOMC news conference to see if there's any shift in tone. Thank you, Myrene, by the way, for pulling these articles. These are great. Right now, the market's pricing 25 basis points. We talked about that. Key Bitcoin prices to watch, 93.30. We already talked about that. And turning that into support, higher highs above, what happened there? Above 100K. I don't think we'll get 100K by the end of the year, by the way. Possible, but I don't think so. For this to happen, but here's why. Why? Huge sell blocks here and total market cap. Now, the good news is, the goodish news is, I know it's not a real word, we're on the total market cap, breaking and above the parallel trend channel, and so this zigzag, not really, I'll put it here, we want to see this, but the upside, right around 3.25 trillion, we can see visible resistance, so the upside is limited. Prior support becomes future what? Resistance. It'll at least pull back here, and this puts us into, pardon me, mid-December. Maybe it can run and gun, but I don't know. I think we need to fall back into this support zone first. All right, keep jumping back and forth here. I think we've made the point. Above that, let's see. Give me 1 second, one brief second. Clear my throat, you guys. All right. For that to happen, Bitcoin must first regain a position with a 50-day simple moving average. I use the 50-day exponential moving average. You guys can use what you want, but that's what I found to be best. Let's get through this fast, though. Bulls will also have to overcome the barrier in order to increase the chances of Bitcoin's run to 110K. What is this chart here? We have areas of interest. Major resistance at 94K. True. But beyond that, it could run up to 100K, but 100K is now what? It's now resistance. And a lot of whales took profit at that 100K range, as they should have, and are not going to ride the cycle down again. The bears will attempt to maintain 94K as resistance. Getting in the weeds a little bit, so I won't read all of it. Bitcoin must hold 91.5. Okay, not a lot of opinions here. Bitcoin liquidity shows that either we could come back down below 92K or maybe push up to that 95K. But this is intermediate noise, you guys. So let's see. Binance co-CEO Yi He. I never heard of this guy. Yi He. Hit by a WeChat hack amid growing Web2 risks. All right, don't need to get into that. Ethereum rising to 3.3K proves the bottom is in. Says who? Says Tom Lee. Let's look at ETH. We haven't looked at ETH, but that proves nothing. Proves nothing at all, you guys. We're getting a break above the parallel channel. You can tell in my voice, I'm not hugely bullish on ETH. I think ETH has really let us down. Long term, probably it's a stable network. And the big institutions and governments will go for stability first. So I think that, ETH at some point is the play. But I'm leaning more towards Solana in the near term. But let's have a look. I want to be impartial. Weekly time frame, reclaiming that 3.3 level. Got it. I can see where they're going with that. But it has to close above here. And above that 50-day exponential moving average, the 50-week. So that's what you want to be watching. But what are we going to really be watching for? All right, so here we have Ethereum starting to turn green. Are we there yet? Be like the kids in the car. Are we there yet? We're not there yet. We're above 20. Guys, please be setting your alerts on the weekly time frames and set the messages, because we need a weekly time frame break. This is encouraging, but I'm not there yet. We're not there yet. We need to be above 20 on a closing basis, and then we can have multiple weeks of bullishness. Don't need to look at the chart. I can just open that up and see that when that happened, what did we have? We had a nice rally in Ethereum. Over here, we had a decent rally in Ethereum, but we are putting in a higher low. These are the things to pay attention to if that's the case. Okay, so that's bullish. All right, so ETH is starting to kind of sort of look good, but in the scheme of things, we are nowhere. And I have this image here that I grabbed somewhere else. So kind of showing liquidity sweep. Let me just pull that up here. I forget where I got that. Down around 3,600. So we did come down to that 3,600 liquidity sweep. And we won't get into that again. So we'll see. None of these are set in stone. But after the weekend, look, I'd love to see this. Here's what's setting up. You're probably saying, tell me in English. All right, here's what's setting up. We need to be like Wayne Gretzky. So we want to see this come up and see these moving averages. Sorry, my reading warned me. I was a little too hot when I lean in on the mic too far. When we get above these moving averages, we're setting up for this kind of a move, right? And so another indicator we like is the EMA ribbon. So that shows us EMA ribbon when it gets above, and these EMA ribbons tighten. So I'd say in another week, by next week, we could really be setting up for at least a push to 4,500. Probably not a new all-time high. If you get up in this range and around 4, take profits. Because what do we want to do? Take profits in the sell zones, you guys. It's better to buy on the breakout retest. Very rarely do these things go like that. Bitcoin has. Very rarely other coins do. What happens? We see this and then this. The retests where we buy back. So we sell here. Maybe sell half here. Sell some in the top. Keep a moon bag. Sell the pump. Buy the retest. That's when you know you've arrived. When you just kind of look at those things and say, all right, that's what I'm going to do. Now, it's two things to know what to do and still do it. It's hard. It still happens to me. I get FOMO. I sold Solana right into that 144 range. Nice little virtual pat on the back. Nicely done. Good job, me. And then I went back in. All right. So let's stick with ETH. So let me do this. I'll move ETH back up into the second position. But does that make sense, everybody? On the daily time frame and the weekly, We are starting to set up, and I know we've been kind of just very patient for a while, but these are the criteria. Break out of the parallel channel. It's going to come up here, probably reject at 3,500, and then if we get a retest, let's put our little circle of opportunity in here, push up in the retest. We want to be looking for that for an entry, and ideally get an ERI and a weekly TSI, getting a little overbought on that daily ERI, so TSI right there. So I know it's a lot, and the ideal setups, they're far and few between, but we can still make nice gains bouncing out off of these moving averages. So again, I'll turn off that EMA ribbon for a minute. And oh, this is interesting. How about that, you guys? The average true range, pardon me, is, so clean this up a bit. These are the things to have on your chart. Now, the average true range can be used as a dynamic stop loss. I use it for when it flips back to entry, often on the 4-hour, but this can give us some interesting clues. Let's see. How can I clean that up for you guys? Let me turn off the order block detector and momentarily the EMAs. Do you guys see this? So on the average true range has just flipped to entry. The yellow candle here means that it's pending a reversal, so that happened yesterday. And I usually leave this off, but on occasion I'll flip it. And what we love to see is when this goes entry, because the last time we had an entry after a drawdown, this was actually consolidation, we had a really nice move higher. Okay, now occasionally we'll see a fake out, but so let's, there we go. This to me looks pretty good. So ETH, until we turn on the order block detector. I know it's tricky, you guys, but I think we're in this zone of opportunity with ETH and want to pay attention. I'll let you know. But that it's setting up for potentially a move, but none of our other signals have really fired. I think it has some upside. It'll probably come up in here and pull back and go like we talked about. So I think we've covered ETH. All right. So let's see what they have to say, the talking heads. The gain between 97 and 140% after ETH price flip, the 50-week moving average into support. Similar scenario. Okay, well, let's do this. Look, I encourage you guys to spend time on this. Be curious and do your own kind of sleuthing, for lack of a better word. So we have our exponential moving averages. I'm going to turn those off because this is suggesting, and you have access to all these moving averages up under the charting tool. So we can just put in moving average, and that would be the simple moving average here. Not sure why I don't have it favorited. No, it is favorited. What are all these other things that are? I don't need all these other ones. Anyway, just click on that, and then we'll move it over on the SMA. Click on the little gear icon, and we'll go under inputs. We'll change it to 50. Go back to style. I like to make these a little thicker, but I don't particularly like blue. But it's here nor there. We'll keep green and orange for the exponential moving averages. Might as well use blue for the simple moving average. That makes sense. Blue, kind of simple, so it fits. So the article's suggesting, and let's take a look. This is where I encourage you to kind of take some time on this and say, go read articles, and this is how you learn. So, all right, we're above the 50 simple moving average. Not terribly exciting, but it's also true over here when it lost the simple moving average here. Big drop. Interestingly, that was October 10th, and it pulled back up to resistance. So, you know, there is a point where you have too many things to watch. I get it. You have your favorites. But here's, I guess, what they're getting at. So below the 50 simple moving average kind of acts as resistance. It's kind of like our ice on the lake. Let me just compare that to the exponential moving average for a second. Yeah, they're a little bit different. You know, using both at certain times, I just don't want to overwhelm you guys, but you can see both have their uses, and both are pretty accurate. I like the exponential, but you can have the simple on there too. When and if we get into shorting on margin, these are the ideal setups, where it breaks below these, consolidates, pushes up, but it kind of fails, goes sideways, and then rejects. Look at that ideal short. It was sideways, rejecting here, short, pushes back up, rejects at the 50 and the 50 EMA. This would have been an ideal short, obviously, hindsight, but when I was doing shorting and day trading on shorter time frames, that's the exact setup I'd look for, and I would hammer it right on these two rejections. And then here, and then basically write it down. I know it sounds easier than it is, but point is, article saying back above the simple 50 EMA right here, and then it pushed above. That was a pretty good clue. And then the 50 really pushed higher. So anyway, point being, when the price gets above the 50 simple moving average on ETH, you get some pretty nice gains. Let me just take everything off that chart for a minute. We can see that, right? So we'll be looking for these kind of patterns on Ethereum and everything else. So it's kind of starting to get there. There's a big sell block. But imagine if we push up, take out the sell block, retest. So again, our zone of opportunity right in there. Any questions, you guys? All right. Let's keep going. Trying to keep this short, but I'm trying to educate you guys too, because if nothing else, if we're not earning, we're learning. And I didn't make that up. It's kind of a corny seminar comment, but it's true. And when things are quiet, you should be learning. Take that time, and take some time for yourself, but take that time to learn and go research and catalog. All right, Ethereum may have found a floor at 2,800. ETH price previously rose 100%. We already talked about that. Reclaiming the 50-week moving average. Oh, okay. So we were looking at the daily. All right. Let's see. We have reclaimed the 50-week. I'm always watching the EMA. Okay, so both seem to have some relevance. It's usually personal preference, you guys, but if you really want to protect your money, look at both. Over here, 50-week, back above, ran hard. Broke below, down, 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 broke above. Nice little rally there. So, back up here, that's that 40%, 47% move. So it's kind of trying to sort of break higher, but we're not there yet. All right, this is what happened. The editor of Cointelegraph said, go write an article about ETH. Nancy Lubelay, never heard of her, and so they did. All right, we're getting into the weeds here. So breakout seen Ether's price reclaim a key trend line 50-week EMA. There we go. Increasing the likelihood of steeper climb in the coming days or weeks. Yeah, we'll see. We'll see. And related, Smart Whales opened $426 million long bets as ETH price chart eyes 4K. All right. I can't really base anything on that because sometimes they hedge. And all of this, don't believe everything you read. All right, previous instances show ETH trends sharply when price above 58. All right, guys, I think we're, if you want to keep doing news, I'm going to get through this. Let's get to the charts. How are we doing on time? Coming up on 45 minutes. ETH is back, 50-day EMA. Talked about that. Once flipped to support, the all-time high at 5K becomes the next target, sort of. These guys, just be glad that we have what they don't. They are basing this on old all-time highs up in that range, which is fine. But the smart traders and the money is selling on ETH all the way from 4,000 up to 4,700 to front run that trade. It's malpractice. It's not to tell people to run it to 5K. Lots of resistance along the way, as we can see. So use the signals. All right. Just checking some comments over here. Move this out of the way. Sorry, the chat keeps getting over covering the controls there. Cointelegraph, etc. Ethereum whale buying bullish ETH price. Look, the news is useful, but not really the be-all end-all. I'm teaching you both. Soar's back above 3,400 ideal setup. Whale and shark accumulation, but retailers are dumping. Right. That's all. One more news article. We'll get through it fast, and then we'll get back to the charts. Japan plans major shift as crypto moves from payments to securities law. By the way, I shared in a news article, UK has just kind of stated that crypto is now property. I don't know. It's that probably so they can tax it as property. That's an interesting ripple. What is Japan? What is Japan's plan? Major shift as crypto moves from payments to securities law. Japan moves to crypto regulation, payments securities laws, tightening disclosures for IEOs, whatever that is. Like, it's probably like an IPO, cracking down on unregistered platforms. Let's see. The Japan carry trade is still what is. We'll talk about that when we get to the charts. But that's still unwinding. If you don't know what that is, that's basically Japan issued a lot of low interest debt, zero interest debt, and because nobody was buying their bonds. And a lot of people came in, borrowed a lot of free money at no interest. And then Japan started raising interest rates because they had to. And a lot of these companies started having to unwind their Bitcoin positions. They bought a lot of zero interest debt on the yen, bought a ton of Bitcoin, a lot of crypto because it was free. And I think October 10th, speculation that major platforms, hedge funds, maybe exchanges got upside down and they're quietly, secretly dumping their Bitcoin to survive. And so you go on Twitter X, you see a lot of comments, who is selling Bitcoin? It used to be the whales, and now it's likely Japan. And without more liquidity to boost the markets up, I shared the liquidity study. I'll pull it up here today, showing we have been in a liquidity decline for months now, despite what the M2 global liquidity shows. My independent study shows it's been going down, hence prices going lower. All right, crypto assets increasingly being used as investment targets domestically and internationally. Report noted, protect users. Regulation treats crypto as a financial product. And document outline shift legal basis. Regulation from PSA to financial instruments, not really important. Strengthening data disclosures. There's an infinite amount of news, you guys. I know. I'm just skimming for anything that might be useful and meaningful and actionable. I don't see a lot here. Payments coming to PlayStation. Quick aside, I was working with a friend in the last bull cycle and met the guy that created Sony PlayStation. And my friend had created a platform called not ESPN, but ESTN. And it was a metaverse stadium where you could buy an NFT, which would be a seat. And if you owned a seat, they would have virtual concerts and games and things, and and then, but if you own the seat, you could sell your tickets, you could rent your tickets. Great idea. And the original creator of Sony PlayStation is a guy named Ian worked at Sony. He was part of the team, and he was an interesting character, and spent a couple days with those guys. I'll leave it there. But anyway, the whole thing imploded because this is just crypto. This friend, they had raised $2 million in NFTs for the project, and they put it all in Terra Luna and their UST token. And he personally put $80,000 into it days before the collapse. So if you think you're having a bad day, there's people out there that have really now he owns pontoon boats and rents them out, and takes people out on the ocean. So anyway, I'm not sure why I shared that with you, but there you go. Market frameworks, FSA. I think we're done with news, you guys. Anything else? We can pull it up here, and I'll just think for a moment. Do we want to look at anything else here? We're not in alt season, and we'll look at some charts to kind of give us a read on that. I don't see any other questions. Michael's saying, yeah, Michael, I was going to ask you, the UK news is about taxation. That would make sense. Everybody wants their piece of the pie. All right, ETH is kind of pushing higher here. Let me do on the 1 hour, 4 hour. What's going on here with ETH? It's up a little bit. So it's looking, so ETH, looking interesting. I wonder if this is a news-driven retail pump. In the old days, we'd watch in the day trading room, we'd sit around watching Joe Kernan and CNBC, and if Joe Kernan came out and said, after the break, we're going to talk about a biotech with some significant advances and blah, 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 we would go research that and find out what it was and buy the snot out of it, realizing that as soon as they said it on CNBC, everybody would buy it, and then the day traders would dump it into that. So I wonder if this is the Joe Kernan effect. If it's on Cointelegraph, because of that article, might be. But, over the last 4 hours, seen some nice buying accumulation. So here's what so there was that article that said whales are buying. So you say, great, put it in the back of your mind, go to the charts. If you see big green buy blocks like that, that confirms that the whales are buying. Now, sometimes big whales like Tom Lee will go buy over the counter. That won't show up here. But this means institutions and bigger traders are buying. So should we run out and buy ETH here? I'd say no. There's a sell block on the 1 hour. Now, here's an example of when the Bollinger Bands tighten. This is more a teachable moment. The other night, I was saying on Solana, Bollinger Bands tightening usually breaks out to the upside. It didn't, but now on ETH it is. I think the big caveat is with any kind of meaningful move, and I do make this mistake sometimes because you see the setup over and over again, and you hope that it continues to work out. But typically, it's going to happen in higher volume during U.S. market hours. Try to get out of the habit of trading in the middle of the night. Lots of fake outs, and so I found that to be true. And anyway, here we can see big push higher on the 1 hour. Got above that 1 hour Bollinger Band. Pay attention, you guys. When you see price above that Bollinger Band, it will invariably go sideways, so good time to take some profits off the table, pull back a little. Again, hindsight 2020, but generally these the light green buy zones, the light green means buyers bought at market. They already purchased. And the midpoint of that generally will hold. There's a little bit of alpha for you. If we also see a buy block where there are continue to be buy orders. These is where the orders are if it comes down in this range. So this supports this. This is an ideal signal for a continued push higher on the 1 hour. So could it go up to 3,600? Probably. I'd be a little leery on the 4 hour though, because it's overbought here and it's got to get through this sell block. So what would you do? Put an alert here to 3,400 so that you know the instant that the sell block has been taken out. This is exactly the process that I use, and once you internalize these things, you'll start doing it yourself. And it's interesting. Look at that rocket there on the 4 hour. Yeah, I have the rocket signal turned on and should be doing more of that. All right, on the daily here. So ETH, look, but the problem is end of day sell-offs. Today is Wednesday, and so I think I'm not really inclined to chase this. There's a number of factors at play. It's getting above these moving averages. Let's see how the day closes. Let's see what FOMC says. This could easily reverse and head back down lower. If there's positive comments, it could come up here and take out this sell block. But as of now, when in doubt, stay out. This could go either way, you guys. What we want to see is a push up here, rejection, and retest. Everyone got it? Split screen setup. Yeah, this is just a 1 hour, 4 hour. You guys can do this if you ever want to do that. And I shared one the other night, which has the 4 time frames. And if you want to have a 4 period time frame, you have all of these up at the top, and way more than you'll ever need or want. Trust me, I've not made even a tenth of these probably. So if you wanted to have an additional one, here's how you do it. You could say save. And you could make a copy of this and then, name it and then switch it to the 4, like something like that. If you guys want to see that, I did make one the other night. So I'll do open layout. And I called it the 515-60-240. So I'll right click, open in a new tab so I don't lose the current one. If that was too fast, go watch the replay. But here, wow, it looks a lot different on a horizontal monitor. So that is probably makes your eyeballs hurt. It's not too bad on a vertical monitor. Anyway, your eyes will adjust, especially if you turn off all the studies. And so, but I wouldn't get, this is more for timing. I've got 1 hour, 4 hour on the bottom, on the top 5 minute, and 15 minute. This is kind of for day and swing trading. So you don't need this. So we'll leave that alone. Chart saying, sorry, I meant chart on left and indicators on the right. Well, I didn't pull that up, Ray, but okay. I'm not sure. Maybe you saw that somewhere else. Here's, I think what you're looking at. This is the one. This is called the SAM chart, by the way. Let me see if this is the one you mean. And, I'm going to reward interaction and commentary. There you go. Let's see. Have to go. Okay, Nicola. Thanks. Nothing really to see here. Everything's waiting on the FOMC. Sam's layout. Maybe you're referring to this one. This was a cool one Sam came up with. Yeah. So this is chart on the left and signals on the right. Now I've buggered it a bit because you can't make one without the actual. So we kind of push the chart out of the way. And if you guys want this, let me know. I can give you a link and you can just load it right in. So this is another way to do it. Split screen. You just said we're not in alt season. Michelle, okay, thank you. So the question is, how do we know we're not in alt season? Very simple. We'll go up here. I have it bookmarked, and I think it's CoinGlass. And no, it's blockchain. Blockchain Center. Is it alt season right now? You can, if you guys want the link for this. We are not in alt season. So how do we know that? Bitcoin dominance usually is the leader of that, and now we are closer to Bitcoin season when Bitcoin's going down and alts are going up, and we get up in this range. We hit altcoin season back in September briefly, but we didn't really get to feverish peaks, and the smart people were running for the exits. Will we get another alt season? Possibly. We saw glimpses of it back in July also, but currently we're trending down toward Bitcoin season. We will not get another alt season. Bitcoin has to run first. Bitcoin dominance has to peak again and roll over, and then Ethereum. Now the caveat is at least we need Ethereum to run and Ethereum dominance to run, because that's when we start to see the rollover effect, people selling Ethereum into alts, and then we see this kind of run up into alt season. But unfortunately, if you're holding a big bag of alts, it's not looking good in the near term. Some are suggesting we're gearing up for that. So if we were to say, all right, well, what if? Here's an argument. I mean, if we do that, got this cool drawing tool. So we have this potentiality. I mean, this 33 level has been resistance, support, resistance, could turn higher. But if you want to monitor this yourself and bookmark it, I'll put that in the chat. You can look it up on blockchaincenter.net. And there you go. Good question. All right, let's jump into a couple other things here. Let me just check the news and see if we missed anything on ETH. Let's see. I wish that they've suddenly put AI in here, and I'd rather get the news itself. Let's see. The recent Fusaka upgrade. That sounds like Fukushima, that nuclear disaster. So anyway, no comment. Upgrade is expected to enhance growth. So that's the reason ETH wins in the long run. Every upgrade strengthens the network, makes it more stable, and there's some uncertainty going into the upgrades, but they test it thoroughly. I don't think they've ever had one go sideways. Ethereum's supply is tightening with just 8.7 available on the exchanges, the lowest since 2015. That's interesting. Large institutions have also acquired nearly 4 million ETH in 5 months. Let's take a quick look at what's it called, Farside Investors, and see what's going on the ETF flows. We've been seeing ETF flows going out as of yesterday on the Bitcoin, as some people call it, ETH. ETH is starting, it's steady. I was watching Solana, which, let's see, had not had a negative day. Solana ETF, okay, I take that back. Bitwise continues to buy. And Van Eck is in the game. But look at that. We've added a lot more quietly on Solana ETFs. There was only one initially, and now then there was two. And then now we got Franklin Templeton, 21 shares, Grayscale. And who's been selling? 21 shares. Now I want to say they had some trouble. Yeah, they're likely having to sell. They're a smaller, I remember them from last cycle. And they were kind of up there with Jump Trade. Jump Trade was one of the first to blow up in the Japan carry trade. I think it was last summer, and because they were buying a huge amount of free money from the Japanese yen, and then they had to dump a lot of it because they got upside down on that when they started raising rates. All right, Let's see. Is this useful, you guys? If you want me to look at anything, let me know and we'll get to it. Supply tightening. So ETH is starting to get a little bit more interesting. Yeah, and Vanguard. So Vanguard is huge. Vanguard plus BlackRock is something like $21 trillion in assets. BlackRock was a huge boost. No one's really talking about this, but Vanguard is the secondary player, and they're almost as big, and they also represent pension funds and IRAs and things like that, to my knowledge. Correct me if I'm wrong. But now Vanguard not in the Solana game yet. They did just come in. It's hard to see. I know you guys. I don't see them officially in the list, but they did announce recently that they are in the game. And look at this more and more. Look at this is adoption, everybody. So at some point, I think 2026, we have another rip-roaring rally. We just have to wait patiently, like the Black Panther in the shrubs, waiting to pounce. Some of you know why I use that analogy, because I believe I was almost eaten alive by a Black Panther in South Africa once, and on a game reserve. Anyway, but I choose to call it my spirit animal because that was why I didn't get eaten. All right, access ETFs. Why? Yeah, right here. Let's click on that. Vanguard's $50 million clients. Wow. Soon gain access to crypto ETFs. Why this is significant. So we have this shakeout happening, but this is significant. Key takeaways. Vanguard. Sometimes this thing just pops up and I can't get rid of it, and it's super annoying. Okay. Vanguard's decision to open access spot crypto ETFs. Scott's got to run. Okay. Thank you, Scott. Have a good one. All right, so million clients. Regulated path. This is the key, you guys. Vanguard decision open access to spot crypto ETFs. Why is that important? Because a lot of their clients can't go buy crypto. They can't. It's got to be regulated. So that's why ETFs, they are the on-ramp for institutions, for pension funds, for companies that have in their bylaws that they will only invest in regulated instruments. This is the on-ramp. And so the path to gain exposure to digital assets. Let that sink in for a minute. Okay, I know we're beaten down and everything looks dreary and dreadful and it's all go look at, but we have to be really watching carefully, because now this won't happen overnight. Put your FOMO back in the box. But I think that 2026, on the one hand, we have likely recession, we have interest rates, we have jobs and all of these things. But we also have the AI revolution and this on-ramp. And I think I made my point. So 2026 is going to be interesting. And it's going to probably be muted. This leads to me to believe we won't see 80% corrections like usual. The argument is we might see 40% corrections. And over time, as it becomes less of a nascent industry and more, we'll see it become more boring, but less volatile and up and to the right. Okay. Until quantum computers crack all of the... but no, that's not an issue. The firm will allow trading approved third-party ETFs tied to BC, XRP, Sol right there, while avoiding meme coins, right? The firm, obviously, are unregulated tokens, choosing not to launch its own crypto products. Excellent. The move, now it says, but here, there's some key words in here. Will allow. Not there yet. Okay, they need to get their on-ramps. They need to get the green lights for all the checks and balances. The supervisors say, all right, everything good. Okay, all right, let's get all the RIAs, the registered investment advisors, get them in a big meeting. Say, all right, we're gonna starting January 1st, whatever. And then we want you to start calling all your clients. How many clients? 50 million clients. Is that going to happen overnight? No. Is that going to happen over years? Yes. This is hopefully original. This is all original thought here, but hopefully I'm right. Legitimacy. The move brings significant institutional legitimacy to crypto and shows that eventually, or even traditionally conservative asset managers cannot overlook sustained demand for regulated exposure to digital assets. That's a lot of word salad for, hey, it's time to buy crypto. Vanguard's embrace of crypto reflects a broader institutional trend. Major financial institutions such as BlackRock, Fidelity, Bank of America, diversified investment offerings. It's coming. All right, a major boost for digital assets. Vanguard hasn't yet, set to grant its large client base access to spot crypto ETFs. This is huge, guys. It gives more than 50 million investors. Let's say every investor has $10. That's $500 million. Let's say they have $100. That's $5 billion. Let's say they have 1,000. Doing the math, this is where the trillions come in. Convenient on-ramp and adds institutional legitimacy to cryptocurrencies. This is one of the best articles that I've read in a while. This is huge, you guys. Vanguard's decision to support regulated crypto products here. I won't read all of it, but I want you to. And I don't know. That's certainly meaningful. Shift to contribute broader interests in crypto and influence how some investors evaluate their portfolio options. Maybe we will switch to some kind of an ETF. I mean, in the long run, do we really want to be, I think a basket of these, and eventually they'll have basket ETFs, crypto ETFs. So they'll kind of like the old mutual funds of the old days. And anyway, as one of the most conservative firms in traditional finance expands access to digital assets, that means it can happen slowly. The broader market may view crypto as a more accepted and stable part of diversified investment strategies. Article discusses crypto ETFs now available through Vanguard, why it's significant, how it reflects broader institutional trend, how the move could influence global crypto markets. All right, what are they changing exactly? Altered its policy, staying away from crypto ETFs. Let me skim this. Asset manager will now give its clients access to third-party ETFs. Boom. Mic drop. Mutual funds invest. We already covered a lot of this, but all of this language is very bullish. And how are we doing on time, by the way? If you want, I'll stick around for the Fed announcement, but the rate cuts, the comments won't filter through until 2:30 or so, and I don't know that we want to. I'll probably do a video update instead. No point in trading it in real time. It's usually pretty quiet and muted. Okay. ETFs backed by gold as early, let's see time-wise, as early as December 2025, which is now, Vanguard will refrain from issuing its own ETFs, mutual funds. Oh, as of early December. Okay. So not yet. The firm's approach consistent policy providing, but not creating gold ETFs. So they'll provide, but they won't create their own. Okay. So we may not see Vanguard here. They might just send their clients to buy other ETFs, is what I'm reading on that. Let's see, though. Let's dig into it. It will not offer products linked to meme coins. Talked about that. Client advisory noted the customers need to enter Vanguard's educational resource crypto. But I want to see which ones are going to recommend so we can sort of monitor the uptick in that. And Eric Balcuna is always good. Senior ETF analyst at Bloomberg quoted Vanguard on how the ETFs have performed. All right, so let's just see. It's a longer article than I thought. All right, we're getting into it. And likely to impact core strategies' long-term returns for millions of investors. Change could also redefine accessibility, structure popular, diversified portfolios, mutual funds, pensions, etc. The scale of their base. As of October 31st, Halloween, Vanguard offering 224 funds, including, now these are not ETF yet, offering crypto ETFs on such an extensive platform will have two key consequences. Broadens the number of investors, so they'll expand their investor base who can gain exposure to cryptocurrency prices without leaving conventional brokerage, so they make money. Signals regulated crypto offerings are becoming difficult for major financial firms to overlook. Adoption. Cautious initial step rather than full adoption will take time. And availability through Vanguard may lead to more demand for Bitcoin. Prominent access does not imply that more than 50 individuals will immediately purchase the ETFs. But again, there are RIAs calling their clients saying, yeah, I think you should have a 2% allocation to Bitcoin. Even 1% is massive. And if it gets to 5% over time. So anyway, reduce barriers, all of this over time adoption. All right. All right, let me just get through dramatic shifts to shift from too speculative retirement to Vanguard as a vocal critic of, until early 2025, they were critics Former CEO, he's gone now for being a critic, probably often urged spot bitcoins do not belong in a long-term portfolio. What does the new guy say? For retirement savers, described as too volatile, et cetera. And Buckley stated would not support 2024 for not support crypto. I think I heard that. He's gone because he was too conservative there. BlackRock stands out, reflects positive response because of BlackRock leading the charge. Okay, BlackRock has its own ETF. I wonder if Vanguard's is going to promote BlackRock's ETFs. That's what I'm trying to get to here, guys. Bloomberg, let me show operate exactly as intended. 10 hash. This is a never-ending article, you guys. ETFs trading. I want to see, what do they recommend here? May impact markets there. Cryptocurrency. They're not going to tell us, I guess. However, many Vanguard clients, conservative, retirement-oriented savers who may not welcome volatility associated with crypto. What volatility? What are you talking about? Crash is really the best crypto avoiding these. Adding these assets to portfolio may expand investable choices. So that was just a lot of word salad. Anyway, all right, guys. Well, we went down the rabbit hole on that one. And so let's see. I want to see if there's any meaningful news stuff on Bitcoin. Surge coincides with the federal rate cut, front running, obviously, and nothing more there. More events. I want the articles back. I know, not this AI stuff. All right, what about Sol? Anything on Sol that might be interesting? Heavy selling on-chain data, reduced sell momentum, realized profit loss drops. Sol faces resistance 140. We already covered. Talked about the Vanguard. And Invesco Galaxy, cool. Filed for a Solana ETF. Guys, remember, the Solana will catch a bid at some point to front run the ETFs, like we saw with ETH. And when I say will, I mean probably will. I can't say for sure, but right in here, our zone of opportunity will present itself. An opportunity will arise. All right, let's see. KS chiming in. Let's see. I missed some comments here. Regulated instruments argument by Vanguard is BS. Okay, tell us why. They had been allowing to invest in Bitcoin miners for the last several years. Bitcoin miners are, I guess that's more of a real business, but let's see what your comment is. They did clamp down on OTC, BTC crypto instruments, listed NASDAQ recently, so the ban became a moot point. I mean, true, all of this is smoke and mirrors, and they'll find a way. But for full adoption, how many of their clients would have known that? They want mass adoption. They want the people calling in saying, I'm 85. I want to probably live another 10 years, and I want some exposure to this crypto stuff, right? So anyway, but worth noting, you can never fully trust any of the narratives on these things. There's always a side hustle, and like them securitizing mortgages back in 2008 and junk, all those. Anyway, would you consider adding gold silver update in M3? I will not, because I'm not an expert, Ronald. So I can pull up a chart if you want. Look, show me the chart, I'll tell you the news. But I am not a gold bug or a silver person, so we could certainly pull it up. So we'll do that, and because look, our indicators work on they're human emotion based. So crypto futures, I was on with a very successful futures trader late last night. Friends on Facebook made millions shorting Bitcoin on the way down, or S&P and some Bitcoin, and may have him on as an interview later. But where was I going with that? And totally forgot. Oh, the indicators. So he'd like to check these out for futures trading. I know Joe, the creator, he builds and has built an automated trade algo for the S&P. And when I talk to him on the phone, on the rare pleasure I get on the phone, probably today actually, but I always hear in the background he has sound effects. So if I hear a bear growling, I know the market's just turned bearish. And if I hear a bull mooing like a bull would, then I know it's turned bullish. Joe's all in, guys. He's amazing. All right. But point being, these will work on gold and stocks and ETFs, etc. We'll get to it. Most Vanguard clients got exposure and now can do Bitcoin ETFs soon. As much too coincidental with the recent behind-the-scenes hit by JP Morgan on MSTR. Yeah, that's a very salient point there. And I'll read that again. Most Vanguard clients got exposure to BTC via MicroStrategy, which was kind of, they were advertising it as a 300x or a 3x play. Although when it tanked, it preceded the dump in Bitcoin. And now, so the timing, now you can do Bitcoin ETFs. So the point KS is making is that maybe they're aligning, Vanguard aligning with the attack, essentially, the attempt, let's say, we won't say attack, we'll say the attempt to force MicroStrategy to into insolvency so that they dump a lot of their Bitcoin. Look, it's not nefarious, it's business. If you believe and you're a major fund and you now are late to the party, and MicroStrategy is way ahead of the game, if there's a play to force them to dump and tank prices so that you, Vanguard, JP Morgan, can buy a lot of it cheaper, then of course you're going to do that. I'm sure those conversations are happening, but please watch that keynote I shared yesterday with MicroStrategy. I'm sorry, I'm just going to keep calling him that. Saylor did in Dubai. Watch that. It's he's too smart. He's too far ahead. It's almost like playing with children. He's next level. I just can't see that happening. And I know that their basis, their liquidation, if you want to call it that, is so low that it's very small chances. And I also think that people like Elon, who has money and believes in crypto and doesn't like the nefarious kind of attacks on companies like that, would step in, and the community would step in. Wouldn't you? You know, if you just kind of say these JP Morgans and are kind of going after or trying to take it down to pull it like a hit job, I would go in and just buy some for principle. I know that's my read. I don't think, so anyway, probably enough pressure from BlackRock, IBIT making a killing since its launch, and enough Vanguard's HNTs. Yeah, we should look at the IBIT again, threatening the Vanguard having left. There's a lot here. Making a killing since its launch, and enough Vanguard HNTs. What's an HNT? A high net worth person? I don't know. Launch HNTs, either threatening to leave Vanguard, I assume that's what you mean, or having left for BlackRock. Yeah, high net worth targets, or Fidelity, Schwab. Yeah, so that's also a valid point. Okay, where were we? Gold. Hey, look, I'm going to reward audience participation, so let's look at gold. And I'll go all. Do we want the gold indices? Guys, this is not my, I'll just be honest, this gold is not my, I would mine for gold. I've treasure hunted for gold. I don't own any gold. The total value, this is usually a good one. Yeah, okay, well, close enough. All right, what is it? So we see a cup and handle forming. And so what I would be watching here, there, breakout kind of above that handle pattern, and a move on gold. I could certainly see this with the recession looming. And so if this is the cup, then the measured move on that, on a handle breakout, would be potentially gold at 46.24. So I would set, let's see, did I get that right? Let me nudge it a bit. 46. I can see gold fighting 5,000 if we get further conflict, recession. Let's do some alerts here. Just see. I'm not averse to gold. I know a friend that made a ton on gold options at one point, and a lot. He made, I think, like $5 million doing that. Wasn't my wheelhouse. What is it all the way up here? I want to know when it gets above, say, 42.70. So that's what I would do. I'd put an alert on that, and then we'll overlay our indicators in a minute. And look, if you get up to $4,600 gold, I would say take profits. And say TP, take profit, sell. All right. What do our indicators show? Overbought on the daily, pegging a little bit overbought, and our signal line rolling over. But let's look at the weekly, because that tells a real story. Also, a bit overbought here. If we layer in some of the moving averages, which I like to do. Where's my 50? 50's all the way down there. And let's look at the radar for a minute. The radar mostly bearish. I think it probably pulls down in the short term. Hard to say, you guys. Gold, and again, not my wheelhouse, but EMA ribbon. It's a bit overextended. I think gold probably pulls back. And the order block detector doesn't work on the Bollinger Bands. These are more for crypto, which are more volatile. But, look, I would sit tight on this and wait for a breakout and above, what did we say, about 42.72, breakout and retest, because that's when it would go. But in terms of how far above it is from its moving averages, generally it'll come back and retest and retouch. So let me turn off the EMA ribbon. That's not going to help us much there. But, look, when it gets that extended, and I used to call this kind of open air. So when it gets this much volume, let me turn off that ERI there. And so money flow. When we see all this air underneath, usually it'll pull back down close to that 21 moving average, 21 week. We saw it here. These are the times to really buy. And then come back here was a good one. I wonder what our signals shared. When our ERI, our TSI, when the RSI Pro shows bullish divergence, those are the times to buy. Not when it's overextended in red. I think gold is due for a pullback just based on this. I'm not a gold expert, but although the volume certainly seems to have ticked up much higher lately. But that's my read on that. If you want to look at silver, it's probably similar. And over here, silver there. Yeah, way overextended. I would, we all know markets can act irrationally longer than we can remain solvent. I think silver is playing catch up to gold. But when back to that open air analogy, like this is not sustainable, I think, and we need a reversion. But you may know the silver market. I don't know the drivers of this. I'm just a Neanderthal trader, But generally, when you see it touch that upper Bollinger Band, silver's behaving like a crypto because our Bollinger Bands are modified. These are not off-the-shelf Bollingers. We changed the standard deviation. I discovered this and just playing around, changing the normal standard deviation on a Bollinger Band is 2. But that doesn't really work because of the volatility in crypto. My point being, this seems to work well with silver, leading me to say that it's volatile as crypto is lately. Meaning, when it touches that upper Bollinger, take some profits, wait for a pullback. Invariably, that's happened over and over again. Here and here, could this thing run to 67? Probably. I've heard that the money's flowing from gold to silver, but anyway, I wouldn't chase that. Our order block detector, unfortunately, doesn't seem to work, at least on the CFDs. Is there another one? You're saying GLD, but all right, GLD, I'll try that. Guys, I make no claims to be an expert in this. I stay in my lane. Spider Gold Shares, you want to see this one? It's the same. Okay, let's see if we can see any order blocks on any of this. SLV, Silver Trust, if you want me to do anything else. But the order, we're not getting order data. Here's why. In my TradingView account, I didn't sign up for real-time data from commodities, things like that. You might have it. If you have it, then the order blocks, I think, would work. Okay, let's see. All right, covered that. Let's see anything else. Let's take a look at Zcash, you guys. On Zcash here, I am bullish-ish. Here's why. How are we doing on time? We're kind of coming up on 90 minutes. I'll keep going, but we kind of like to keep these short for everybody. But I'll keep going. Let's do a speed round. Discovery zone, price discovery is on there twice. What I'm looking for was this pullback, and I got it. We got it right. I wasn't sure, but the brain not firing today, the golden pocket. So that's a Fibonacci term from the swing low to the swing high. And the golden pocket is right in here, which is between 0.618 and 0.65. You don't need to learn and master Fibonacci's, but on occasionally when you see a big run up, Look at that. It came right down into that range. Let me delete some of these alerts because they're making it hard to see. But it came right down in that range and bounced. Very common in day trading, the golden pocket on short-term time frames. Okay, so getting a bit of a bounce here. And we had right out of a buy block, so that was a nice trade. I'll move that over so it's out of the way. What we can do now is do a fib retracement from that top to the bottom and see what kind of a bounce we might get. A Fibonacci, a golden pocket to the upside would take Zcash to 590-ish. So there's that, and I think that would be, 590, 600 would be a good area to take profit, because what do we see there right above that? Big sell block. Okay, what do we see forming? Extra credit. Anybody see anything forming that might be of interest for a further breakout? Okay, somebody knows. Bollinger Bands. Bollinger Bands tightening. Areas of low volatility. When the Bollinger Bands tighten, usually we see a move in one direction. Typically in the direction of price movement. So if we're pushing up here, bullishness, then that could give us that catalyst right up in that range. So, I put out a buy alert on Zcash. I would be, put a stop loss right below 400, 390. Originally I said 290 because I'd give it a little bit of room. There's a big buy block here. But on a closer basis, I'd sell half at 390. Dollar cost average back in here at 320. I think Zcash has more legs. The privacy conversation. Let's take a look at the weekly chart again. Problem is, this is typically TSI going lower is a stop sign. And but so here's a nuance. The caveat to those are, the caveats are, if it's a hot narrative, if there's potential that it's the strong narrative of the cycle, we see these bounce sometimes, and maybe here, maybe there, I don't know. If it's just a run-of-the-mill coin, and each coin has its own personality, a lot of these will cycle high, low, over and over again. Zcash has done pretty well with that, but had a reversal here, and I think that certainly privacy is one of those narratives. So I'm willing to give this a chance. Keep a tight stop loss. Ordinarily, I'd say nope. Weekly TSI heading lower, but what do we have? We have a bullish engulfing candle, pretty almost. If Steve Nissen were on, he would tell me it's not engulfing. He did that to me once on a webinar. He's an old friend. But it's the same. It's the psychology of it. It's the same. So if we can close here, then I think Zcash is bullish. And not bet the farm, but nice. Look, we're looking for base hits here. And so we're watching that daily and keeping in mind the weekly. Daily TSI heading green. So the near term can... See, here's how you juxtapose. How do you say that? Juxtapose? I think it's juxtapose, right? I can spell it. Juxtapose. That's what it is. All right, English. It was a long time ago, guys. Anyway, did well in English and somehow got a finance degree. But the juxtaposition of, there's that big SAT word, of the daily and the weekly. So we can have the weekly rolling over. That's that cruise ship turning around, heading somewhere else. But in the near term, we could still see weekly, each one of these green dots is another day. So could we see this push up for a few more days and then hit some resistance and then align with the weekly and drop? Yeah, that's how you just juxtapose those. Hopefully I'm getting that word right. I don't use that word very often, but what else do we have? Signal line turning green. This is our version of the MACD. Here's another nuance with the signals, you guys. We didn't do the trading view and signals class yesterday because there just didn't seem to be any interest, but you'll get it here. The signal line, which is a modification of a MACD, is most compelling at extremes. So when it got all the way up here and went red, had a bit of a fake out, but when it went red, we saw this huge drawdown from November. Pretty overextended. Now, a lot of times I'll use 0 as the baseline. Just because look at that. over time, this is actually pretty compelling. And so we're way oversold on that turning green. That catches my attention. So I think I'm leaning bullish on Zcash here. I think what I'd like to see before adding to the position is I want to see a breakout here. I have an alert already above 450 on a closing basis, but we're getting above the 21 and 50 EMA. We want to get above that apparently 50 SMA. I usually don't have that on there, but I'll watch it. But the EMA ribbon, like we want to get above that EMA ribbon, specifically push up retest. So put Zcash on the radar. I think this is one I'd go heavy on if the criteria were right for a short-term swing trade. Anyway, and just give you a clear look at it, take all the spaghetti off. But that's a coin in recovery. It came out of a buy zone. It's getting above its EMAs. Could it run to 59600? Exactly. Let's do an alert. Take profits. I am in the trade. Not a huge trade, but that's sometimes I'll just get in a little bit to keep it on my radar, because let's be honest, if you're in the trade, you're watching it closer than if you're not in the trade. And sometimes I miss things because I have all these boring ones that are blue marked that I just haven't watched in a while. What's Hyperliquid doing? Dead cat bounce, nothing to see there. Arrow, guys, I got out of Arrow. I was getting out of it here. We thought we caught a pump. I was holding a little bit, and I just back in here below the 2150 and sell block. I'm out. So and always if you're always looking for what I'm in, the ones in green I own, the ones in blue I'm watching or recently owned. Ones in red I'm watching closely, but Pendle has not been looking good. And I think the weekly is what I was watching. Here's what I'm watching on Pendle because I have this alert. Oops, there it's trying to hold, breakdowns happen on the third or fifth attempt. So 1, 2, 3, 4. It's holding the fourth. I'm hoping that it still breaks up higher on a bull flag breakout. We're getting a TSI green and a bullish divergence. So Pendle is maybe on the weekly time frame and on the daily time frame. So we're starting to see this aligned. There are times where I'll ignore the chart completely and just look at our signals aligning. Not ignore it, but really, if we see this, I have the alert already. When we get above 20 on the daily and the weekly, we know magic can happen. So while those align, I can see us have a little altcoin pump. We should look at total market cap, etc. here in a minute. Ondo was watching and on the daily, weekly, not there yet, but waiting for green TSIs, bullish divergences, still. As Joe used to say, let the cake bake, right? So I'll leave that as red to watch. Sui, I don't really... it's in an uptrending channel. Altcoins I think we need to be really careful of. And it's also in a downtrending channel here, so let's not use that. Filecoin, sadly, has failed us and is looking to break multi-year lows. And I think at some point this will be worth getting into again, but only if it can get back above here and take out the sell block. And I think that, to be honest, the reason that it failed is the AI trade failed. The AI bubble is what killed this. The argument for Filecoin, cloud storage, decentralized cloud storage, who needs the most of that? Data centers and AI projects. And the blockchain-based AI projects died because all the talent's being hired for 100 to 250K a year by the for-profit, big, centralized companies, OpenAI, you name it, ChatGPT, all of those. So the narrative's not there yet. But we have our line in the sand above $1.90. Someday, I would come back into Filecoin. This is kind of the leader, but it's sort of nobody wants it right now. Nobody needs it right now. So same thing with where's ICP? ICP's, I'll move that up here. At some point, why were we watching these? They had huge potential, but potential doesn't mean anything. We need this to sort of start buying and clear all of these resistance zones. So until and unless it does, it's off the radar. Maybe hold a moon bag. I don't know. Sui, we like that. Lido. Let me pull off the Bollingers here because sometimes it'll make it bugger the chart like that, and you can double click over here to turn off the Bollingers. If you ever see this, turn off the Bollinger Bands. Oh, I turned off order blocks, and that'll fix it. And then double click over here to fit the screen. All right, Lido, the DeFi and just not there yet. So these are all sort of just stacks, huge disappointment, near protocol, all of it. All coins are dead for now, and so I'm not going to even be going through why give them any attention. Maybe someday, but not today. Let's see. Anything else, you guys? Ron was. So I think we're running out of time. Let me just do this. I have a couple more things if you want to stay, and you don't need to. But total market cap. What is that telling us? Let me go full screen, clean up some of the mess, and it's trying to sort of hold. It's holding 3 trillion. That's what we care about. Why 3 trillion? That was the high of the last cycle, right? If we zoom out here. And even in 2022, we had some resistance there weekly. No, this was the last cycle high, 3 trillion, and it is now retested as support. Okay, so we're building market structure slowly, but if we put on the bull market support band that's usually used for Bitcoin, when we're below that, it's usually 8 to 12 weeks. All right, and on Bitcoin, same thing. When we're below the bull market support band, it just takes a while to recover, and so we'll see what happens. We could be in for a longer time frame, so we'll turn that off. And the camel cycle indicator, I don't think that works. I guess it does. So the camel cycle indicator, we're also waiting for that to fire on the total market cap. These have been excellent, and especially when they align with our ERI Pro. Boom. My eyes were looking right here. Do you see this, you guys? We do have the tools. How many of you are old like me and remember the $6 Million Man TV show? A guy gets blown up and they have this turn him into a machine. It's like, we have the tools, we have the technology, and they turn him into a cyborg. But that's what I'm saying, because where was that? Yeah, right here. One of the best times to get in the market, September of 2023. And in hindsight, these were not developed yet, but they are showing based on numbers that in the algo. So I'll turn off the camel cycle indicator. We have a massive edge when these align. Look at this. And we are waiting like the panther in the bushes for these specific signals. Guys, I know people have had losses. ETH just crossed 3,400. We'll get back to that. But you can make them back, but you have to make sure not to whittle it away. Okay. If and when we see this again and we're coming out of a buy zone and we're above, look at that 50-week SMA, right? And then we had our early reversal indicator. That's an accidental discovery, if you're new here, that I made with an old indicator Joe had. I believe now it shows institutional programmatic buying and selling. It is called the ERI because it's typically when prices reverse. And we were also using it in alignment with our other signals. But when this is something I noticed while I was getting interviewed by Camel. And I said, it's amazing how often these overlay. Watch right here, you guys. Oh, I'm going to do it again. Off. On exactly the day, September 11th, 2023, if we had a time machine, that would have been a great time to buy, right? We have our early reversal indicator. We have the daily and weekly cycle low. These align fairly often within a day or two. And I'm not trying to just cherry pick these, but on the daily basis also. And anyway, I guess I was cherry picking a little bit, but we're getting an ERI. Point is, if we get another daily, weekly cycle low on the camel indicator in here, that I would buy it. If we go to the daily, this is where we originally noted it here. Daily, weekly cycle low, and the ERI was the next day. Here again, daily cycle low, ERI the next day. Why is that? The question I posed to Camel, some of you heard this, I'm like, what if the institutions, if the ERI, and if you're new here and you want to see you guys might say cute arrow, but it's based on a real oscillator and a Keltner channel and an algo and quant stuff. But again, I think that the ERI is catching institutional buying and selling because of the way, because how it's created. It has to go below a level and above 20 in 3 time periods. So if that is sort of showing that the institutions and big buyers have switched, stay with me, and the camel indicators the day before, I wonder, and I posed to him, I said, does that mean that the institutions are using cycle theory like you are? He said, interesting, maybe. We don't know, but we do know when these align within a day or two, great buying opportunities, and also on the sell side. Guys, look, this L here, I'll turn off the ERI. Pay attention because this is something we're going to rely on. This means a top, left translated top on his camel indicator, also a bearish engulfing candle, but look at the ERI Pro, same day. They don't always align, but here, within a day, boom. Had we been watching that, could have avoided the October 10th meltdown, potentially. And that gave it as a left, this kind of strange it had at the top. His indicator's better at the tops, but ours are great at the tops. I'm sorry, his are better at the bottom, forgive me, than the tops. But still, if we combine it with our ERI, and our ERI flagged here before that drop, caught this bounce, didn't quite catch this, but bearish engulfing and below an EMA, we're not getting bullish there. Anyway, and then down here, what do we have? We had daily and weekly cycle low, and so he believes, and the cycle is in, the cycle low is in. The next daily cycle shouldn't be until January, so I don't know if that means we push up and then do a higher low. That would be great, but we don't know yet. And that's on the total market cap. I should have been doing Bitcoin, but they're essentially the same. Interesting, right? So I here on Bitcoin, we had the same thing and similar within a day. So really watching closely. Let's see. When using this, if you have the camel indicator, though, you should use, if it says down here on unconfirmed or unoptimized, you want to use, instead of the index, use something like Bitstamp. See, these all went green here. Give you a little bit more accurate signals. And so you don't need to go buy it. I'm watching this thing, and it's not really giving us a clear signal at the moment. But the window, it's a pretty wide window of the next daily, weekly cycle, though. But this also kind of shows probably we push up here, and then we come down into this zone here, into this 74, 75K for a while. I do think that's likely. That's where the big buy block happened. That's also where November 5th happened. And it's true that Bitcoin has not gone below the price when a new, technically a new president comes in. That was November 5th at 74K. Number of reasons, a lot of buyers. Guys, if we go down to 74K, just be happy. I think that would be at least a tradable bottom. This, to me, says that it's not going to fail. It's not going to work. It usually will see that, and then that way the moving averages come down, then you get above them, and then you can go. But until then, these moving averages will act as resistance, and we have that crossing here of the three of them. So the zigzag's pretty salient. If we push up into this 100K region, I think that's when we probably drop. So this, I should put that on here so that you guys can see it. I have it on another chart, but we could see that, but more than likely, and I'll make this red, we kind of bounce in, oh good, and come down into here. Maybe a throw over or a Wyckoff fake out, and then, we start doing this kind of thing. Oops. Final click there. We get rid of some of the spaghetti, the orange spaghetti, as it were. So anyway, guys, that's kind of what I'm considering, what I think. And, target zone 150K, I maintain that. Several bull flag targets there, but it might be a while. Stretch that out in the future, and we'll see. But we need to get to 150 before we can even think about 200. You guys want a screenshot of this by any chance? I'm going to do one anyway. Oh, yeah, I have to load up. Any questions, guys? Anyone still here? A bunch of you still here. Any questions at all? I see some new names, by the way. Cool. Brian, Quark, Nicola, I think she left. Jafechi, hopefully I said that right. Kara, Arvind, hey Arvind, Francisco, Kusha, Michelle, everybody, Ray, AKKS, Peter. All right, cool. All right, well, look, I do have to kind of round things up because I don't mind staying, but these recordings get so big that they take forever to upload, and I want to make sure to get it out to everybody else. So that's that. Let's see. Is there anything else we wanted to cover here? I think what I probably do want to do real quick, total market 2, some support there, total 3, all have big heavy sell blocks up above. The more I go along, the more I'm trusting these, because remember when these first formed and we were back here, we're like, God, we're going higher, we're going to go to new highs. And I was just like, why is there a sell block there? And they went away for a moment. Remember, they went away until October 10th. This is what leads me to believe, and then they widened. This leads me to believe there's less liquidity out there and that a big player is in trouble and or multiple ones, and they're selling in these zones. Usually these are not as wide. What we talked about last time, what would explain or what would cause these to be so tall? Obviously, a seller would probably rather sell, a ton of what they have at $1 trillion, because the liquidity, the buyers aren't there. So they've widened this. This tells me these markets are in trouble, and I've read this, that maybe a big player's in trouble. They're unwinding because they have to. $19 billion. It's like most we've seen before is 1 or 2 trillion. So kind of like FTX, the other shoe may not have dropped on those things. So still time to be cautious. Guys, we've talked about all these other coins. FOMC time soon. Yeah, I'm not going to stay on for that. It's going to be a quarter point. Powell will come on at 2:30. We need to see the tone of it. But more importantly, like, the reason I don't make a big deal about it, it doesn't matter what happens. It matters how the markets react to that. And there's and Powell makes it very cryptic, and then everyone has to analyze it and say, well, purple tie, blue tie, and all of these things. And by the way, that's one of the funny things about the camel indicator is they have added a Powell's tie in here. If you want to have some fun, go down to the settings. I've turned it off. The tie color, Powell's tie, and it's, what does this mean? It means purple is, we don't know yet, but switch on again, off again. Anyway, just a little fun there. Anything else? Any other questions at all, everybody? I mean, I was tempted to blow it up another. Well, I did promise one chart. Let's do this. On the liquidity side, here, I pulled it up yesterday. And I'll just skim over to USDT dominance. We don't need to do that today. What happened there? Hold on 1 second. Open layout, liquidity, monthly, open a new tab. And I guess while we're at it, maybe we'll do USDT. Well, I can just look at it real quick. US Tether dominance, where is it? It's below 6%, so that's fine. There. Okay, and there's a lot going on. If it's the first time seeing this, essentially what we're looking at, and I'll just move everything else out of the way. That's what I want to do. If I grab it just right, there. What's left on the chart, this is the liquidity, which has been dropping. And been dropping since February of 2022, right? So we've seen, now we started to push up higher in early December, but this is the liquidity for all the central banks. This is my study that, and I based it off on another, but I added a lot. So we can see Bank of England flatlining, and it's starts inversely. So wait a minute. So Bank of England in purple, you can barely see it flatlining. Then we get to People's Bank of Japan, kind of pushed up, flatlining. All of these have been flatlining. Bank of Japan here, European Central Bank, and then the Fed, and then the global. So liquidity is not going higher. M2 is not really the full picture. And this usually is delayed. This is a monthly chart, so, but we kind of need to see that turning higher for the bull really to be back. And the last time we really started to kick that off was in February of 2020, and we didn't see the massive effects till kind of 2021 here, right? So anyway, I'm not going to save that because I don't want to overload it, but that's the deal. And thanks everybody. And the rest of these, we'll talk about this later. This is the time between cycles and everything else, et cetera, et cetera. And liquidity cycle tops, generally bottoms happen. This does suggest, though, that the bottom of the next market, this market, should be in August of 26. Should be, based on these other time frames. Generally, liquidity tops. When liquidity tops is when the bear market bottom is in, and that's been 1,400 days, give or take. And this zigzag here, this oscillation, is liquidity cycle. So here, bottom of the market. Then here, mostly the bottom of the market. Here, bottom of the market. So here, doesn't project price, but time-wise puts us June, July, August 26. Bottom of the bear. You know, maybe the 4-year cycle's over. Maybe it isn't. We'll see. But that's all I have for you guys today. So thanks, everybody. Hope you enjoyed the class. I'll keep you posted. We'll be watching FOMC, and I'll post in the chat, kind of see what everything, how that all plays out. Okay, cheers, everyone. And I'm going to take a quick screenshot there. And if you know anybody, by the way, that should be in this class, let us know. We have a little way to, you know, referrals and stuff like that. I think I do want to grow the community because you know, we have some things we're going to do in the bear market and things like that. So just reach out to us if you want that. If you refer 3 people, yours is free. So there you go. Not to get salesy on you guys, but anyway, cheers. Bye.